Hi there, it is me, and welcome to the fourth lecture of today, of the bootcamp. Welcome to the fourth lecture of the bootcamp. Alright, well, last time we spoke about the actions and the consequences that you can find within the market. The actions and the consequences that lead to a certain price. Supply and demand, buyers and sellers, everything like that. Well, now that you guys know about the actions and consequences that exist within the market, I will continue with the question of how you should operate technical analysis within the market. So, we already know that in order to be able to do technical analysis, we have to be able to read the actions and consequences that exist within the financial market. Yes. Now, once we are able to see that, to read that, we need to know the next important thing, and that will be time. Time is very crucial within the financial market because time means timing, and if you can get the timing right, if you know what happens at a certain time, how people act at a certain time, and how people's psychology are at a certain time, then you know when to take action and how the consequence will be for you. Will you be profitable or will you end up in a loss? Time is really important, and of course with time comes patience and many more things. But for now, I'll just talk about the time that exists between the charts. Alright, so right now, as you can see, we are in the monthly chart. The chart that shows the actions and the consequences within the market on a monthly basis. I've talked about candlesticks before. Candlesticks which are a shape that represents the action or the consequence of the traders. The upward candle and the downward candle. Each candle represents the thoughts of trader, the bias that I've spoken about previously, the bias. Each candle represents a bias of various traders. And if you look at this chart, this view or whatever, we are looking at the monthly chart, the monthly basis, the monthly bias. In the monthly charts, you'll see candlesticks which each one of them represent the actions or the consequences that have been occurring within 1 month. For example, this long candlestick, this represents that in this entire month, let's see, it's probably okay, doesn't it shows, hold up, open high, okay, it doesn't show now, 2020, the third month. Okay, this candlestick that represents the month of March, and in this month we can clearly see that a lot of traders we can clearly see that a lot of traders were biased towards an increase in price, an upward trend. That's what you see here. There were many buyers, clearly. It's a monthly basis candlestick because right now we're looking at the monthly charts. And the March, that's when a lot of traders were biased towards an upward trend. Now, just like the monthly charts, there are also weekly, daily, hourly, and by minutes. You can refine it. But do remember, do take note of this, that every charts, monthly, weekly, daily, they have their own sense of direction. The charts differ sometimes or usually from the other timelines, the other time frames. For example, monthly, we're talking about a whole month here. A whole month, it just shows that the traders were biased towards an upward trend, for example. But on the weekly basis, a month has 4 weeks, and even with the month being an upward trend, that doesn't mean that all 4 weeks has to be an upward trend. It can differ. Like maybe the first week traders were biased towards an upward trend, and then the second week people were less optimistic and it went for a downward trend. Maybe the third week it also continued with a downward trend, and then finally the fourth week people were starting to push towards that upward trend, and then you have this, the monthly candlestick, that shape. But based on this long candlestick, this long upward candlestick, you can see that people, the traders, were clearly all biased towards an upward trend. The way it just goes up without any hesitation, without any form of liquidity. That's just them being biased towards a certain price. As for what liquidity is, that is just how do I explain it? In this case, liquidity will be exiting, traders changing their roles from buyers to sellers or from sellers to buyers. That is what liquidity is in this case. People exiting the market and changing their status. For the weekly, if you go down further to daily, you'll also notice that it will be different from the weekly charts, and so forth with the hourly basis and the minute basis. It will differ because each second, each minute, each day, opinions differ. People go through different emotions every day because people need a lot of things every day. Yeah. So we can't be sure of where price might be headed, especially if it's on the lower time frame, on the time frame that are less long term. Short term will always be uncertain, while long term will be more certain. That is why I want to talk about time with you all. Time is really important because through time, for example, if you look at the monthly chart, you'll see a certain bias, and that certain bias is basically the long-term scale plan of the traders, the long-term action or the long-term consequence. It's an established but still uncertain, of course, fact. An example of this then will just be like, for example, I'm talking about bias here, right? Where what the price will be like what traders are expecting the price to go to because of their actions that basically like summed up where their price might go to. Their actions which lead to consequence, which most of the time the traders are self-aware about. You might even call that market manipulation. But yeah, slight market manipulation, because by law you're not really allowed to manipulate the market. But it still happens, of course. And what's happening in the market itself is market manipulation, but not in a great scale. Yeah, I got sidetracked. Talking about the long-term scale plan. So, say we're nearing Christmas. Maybe right now, October, right? On a monthly basis, we have a certain way of preparing for Christmas. But on a weekly basis, it's slightly different. Like, for example, let me continue with my example here. On a monthly basis, we have a general idea what we will do on Christmas. On a weekly basis, we prepare for on a weekly basis, then we prepare for it. But on a daily basis, we just live our life and we barely mention anything about Christmas. It's even crazier on an hourly basis. We're not talking about Christmas every minute, every second of the day. No, we have our own personal stuff. So I don't know if that example is good, but I hope you understand what I mean. Like, we are expectant towards a certain thing that will happen eventually, because it's there and we have calculated and basically predicted, and we know that it will happen. You can have a general idea of what will be happening there because of the long-term bias, the long-term idea, the long-term future that you have in mind. You know what you need to do and what others might do on a daily basis, in each second, because you know where the future is headed. You have a glimpse of it. And that is why time is important. Because if you analyze the long term, you will know the short terms. You make a bias towards the long term, and then you continue with biases toward the short term. But the short term bias will always follow up with the long term bias eventually. in a more simpler way, it's in a more simpler way to explain this is for example, when you make a plan, a long-term plan that you're certain with is more possible with smaller plans. And these smaller plans is possible to achieve if you're looking for and if you know what you will need to do to achieve your long-term plans. It's all about what I have previously discussed about as well. Discipline and consistency and dedication. Your long-term plan will let you know what to do and how to further plan things out and live your life on a monthly basis, a weekly basis, a daily basis, a minute and a second time basis. So that's it. Knowing how valuable time is and knowing how to work with time in the charts, in the financial market, just the same way how you know how to work with time when you plan something. That is very important. Time is important because time can bring you towards your goals as long as you plan things right, analyze things right, and know what is going on around you. Yes, and that is it for the good